Ladies and gentlemen, welcome to the last but not least session of the FMLS 23, Tightening Grip Retail Trading Regulation in 2024. Please welcome on stage Remonda Kirketerp-Møller, founder and CEO at Muinmos, who will introduce the panel.
Hi everyone, thank you very much for the opportunity to be here today. We hope we will try to turn this into an entertaining session. At least we're lucky to have two Matt Smiths on the panel. We're missing a third. Maybe Alex can be the third Matt. It's not about false positive elimination, by the way. So you probably can see behind us. It's more about the retail regulation, what's been happening over the past, well, many more than just years, almost decades, in the space and across multiple jurisdictions. So I hope you will find the session interesting and exciting. And I will start by asking each one of the panelists to introduce themselves. And I think just for the sake of the audience today, we'll call the first Matt, and the second Matt, Matthew. So if I can ask you, Matt, to introduce yourself. And maybe why don't you tell the audience, if you had a dream regulation, what would that be for you?
Wow, so I'm Matt. We've established that. The funny thing is actually Matt Smith. I'm Matt Smith. Matt Smith and I know each other. We used to work together many years ago. And the scary thing is Matt and I almost share the exact date of a birthday. So I was born in 1998 in October on the 25th. 98?
I'll take that.
I wish, yeah. 1998. I'm super young. 1978. And Matt was born one day before me on October 24th, which is a little...
hospital?
Well, no, you were Scotland, weren't you?
Scottish.
Yeah, I'm Canadian, so it's different. Yeah, spooky fact. So I run a company called SteelEye. We're a financial markets, regulatory and compliance solutions provider. We focus on data aggregation for communications and trading activity, looking for market manipulation, trade surveillance, communication surveillance, dream regulation. More on like anything that's required to make sure that the markets are surveyed properly so that we can prevent market manipulation and financial crime, protecting consumers and market participants. That's what I'm interested in. Yeah.
That's exciting. How about you, Alex?
Hi, so I'm Alexander Culley, and I'm the CEO of a relatively new compliance consultancy called C&G Regulatory Solutions. So been going a couple of years, and we've been helping a lot of firms in this particular space. I think in terms of a dream regulation, well, they're all a dream for me because I'm a consultant, so I love regulation. Keep them coming. Perhaps in terms of them being particularly popular, they've just lifted the bonus cap, so maybe we could have a minimum bonus cap. So we could have minimum bonuses for everybody, particularly people in our role, because quite often we're the, in the past we have been the corporate punch bag, so that would be much appreciated.
Over to you, Matthew.
Yeah, thanks for that. I'll start off before I introduce myself with my dream regulation, which is better data protection, because everyone's just found out how old I am without my permission.
I have his phone number if you want and his email address.
But my name is Matthew Smith. I'm the group CEO for EC Markets. We're a retail broker with an FCA, FSC, and FSA regulation. We also actually now have an FSCA in South Africa regulation as of last week. We service predominantly retail and professional clients.
Perfect. Thank you very much. Thanks to all three of you for a great introduction. Right, let me just give a brief on the topic, and then we can break it out into the various divisions that hopefully will make it quite interesting to run through it with the panelists. So the grip we're referring to is the grip on the markets. Retail investors are always the most vulnerable to scams and manipulation. Equally, the trust of retail investors is highly important in order to maintain a high level of participation in capital markets. In recent years, we've seen a high level of innovation in the markets, with NFTs to crypto payments in the metaverse. The very notion of what money is has actually changed. These are foundation changes that are very difficult even for professional investors to keep up with and actually understand. Add to that social media, which causes the hype around financial innovations. We get a situation where retail investors are potentially especially vulnerable. This situation, along with cross-border nature of trade, which also creates investor protection challenges, has brought regulations to tighten regulations in several jurisdictions. We know that trade is global, but regulation is local. One way regulators try to deal with this is by either cooperating, and unfortunately we're also seeing cut and paste in many different jurisdictions. We've recently seen with St. Vincent where they're asking the brokers actually that are incorporating in those jurisdictions to provide licenses where they would like to actually run businesses out from, which is really interesting compared to how it used to be in some of those offshores, where now they're actually allowing them to get regulated in those offshores, but at the same time they're asking them to prove if they are onboarding clients from different jurisdictions, they need to actually prove that they can do it. That's quite an interesting shift from the offshore jurisdictions. We've seen recently with Spain, I've actually written an article calling the Spanish retail clients Barbie dolls, where literally we're a bit surprised by the level of the Spanish regulator, to which level they took it, and by almost putting a prohibition on CFDs instead of keeping up with the restrictions that ESMA initiated a few years ago. So I think there's a lot to actually digest here. There's definitely a lot of regulation coming about. I know on the panelists, many of the, at least amongst the panelists, they're not necessarily saying we need less, maybe more structure around them would probably make sense. So let's start by actually looking at the UK, and I'm going to start with you, Alex. So talking about the UK, it seems like these days the FCA is taking a more proactive approach. For example, the new consumer duty, you've got also with the FCA is also trying to bring back businesses to the UK, in particular after Brexit. And one can see recent removal of the bonuses cap as a way to draw top talent to Britain. Perhaps you would like to comment on that.
Yeah, it's interesting, isn't it? Because I think this whole thing about post-Brexit with the UK potentially liberalising to try and attract business, I think actually our experience, certainly as consultants in the last couple of years, has been quite different. And if anything, the FCA has been more assertive, more intrusive than it's ever been, you know, since I've actually been working in compliance. I think back in sort of 10 years ago, you would get maybe a month's notice before a visit. Now, some of our clients, they're getting 24 hours notice before a call, or you know, maybe they have a surprise afterwards, you know, send us some documentation, and they think, oh, up front, previously you used to have to give them the documentation. So, yeah, I think personally it's much more intrusive, a lot more data-led. One thing I would definitely say is I think before the end of this year, there's going to be I think we understand there's going to be some surveys sent out. Do take care with those, because those surveys, if you get them, they look fluffy. They look like, oh, you know, it's just a survey. It's a bit voluntary. But actually, based on some of the other surveys that they've sent out quite recently, that's led to quite robust intervention.
Are you seeing more DCO letters coming out as well?
Definitely. There was one last week in relation to wealth management and stockbroking. And even though it says it was addressed to that team, I would definitely take a look at that, because there's a lot of read across, particularly around, you know, marketing high-risk investments to consumers. Big bugbear of theirs since the consumer duty came in was stock lending, for example. So complex investments. How do you balance that with the requirements of the consumer duty, particularly around if a consumer is taking very high degrees of risk in order to get quite a small or possibly marginal rate of return in the FCA's eyes, how can you square that off with, for example, the objective to offer fair value and you know, relatively attractive pricing to your customers and all this type of stuff.
Yeah, we're seeing also a lot of institutions documenting how they review those DCO letters and actually minuting them as well, so to make sure that if you do get an audit, you have some form of traceability there of what you've done. If it's not relevant, you even can document that it's not relevant necessarily to your business, for example. on the consumer
Yes.
part as well.
Exactly.
Good. Would you like to add something about ASIC? I mean, we're seeing pretty much the way I'm seeing the world these days is you have the UK almost dictating how the world should look like. There's definitely a lot of stuff happening at the FCA. We're seeing a lot of competency in that sense, although you could criticize, for example, the notice period you're given for an audit, which used to be, as you mentioned, a month. Now it's hours. Do you feel the rest of the world is kind of slowly copying, including, for example, if we move quickly to Australia?
Yeah, I think in some respects, I mean, certainly with ASIC, obviously what's gained publicity recently has been the extension of the product intervention rules, which actually in many respects are quite similar to the FCA's. There was a paper out a few weeks ago about Australia's derivative distribution obligations for retail clients, and much of that has things in common with the consumer duty. So particularly around things like identifying vulnerabilities in the target market, making sure that you don't mass market high-risk investments. And where there is a little bit of a difference is if you see with FCA, take, for example, with brand advertising. So I walk around the stands the last couple of days and you see the former Chelsea defender here, Gary Cahill and whatnot. And FCA's position on that has been, well, it's just brand advertising. So, as long as you don't put too much context around it, you don't need to worry about it. Australia, in their latest paper, are saying, look, we don't really like it. Because even though it's just brand advertising, even if you're putting your name on a football shirt or anything else like this, well, what is your intention other than to take your product to a mass market? When we think that this is a high-risk product and it should only be available to certain people. So that's one area where there's a slight departure. And of course...
Ultimately received prohibition in Spain, for example.
Right. And how do the regulators deal with it when you've got something like the Premier League?
Yeah.
And,
but do you see that as an issue? Like, I think firms should be able to advertise to what they perceive to be their market. And the regulators need to come up with ways that they can put some guidelines around that. But I think having a Premiership football player... advertising your brand, if it's a regulated and approved mechanism for doing business, should not be a problem.
Do you agree?
Well, I mean, I don't disagree, but I think ultimately one of the things that we have to do, say in our business as consultants, is understand how they're thinking. And, when you've got things like ESG, and you've got this whole idea about being a business being socially responsible and having social credit and all this kind of stuff. The people that work in the regulators, they think like this more often than what they're going to think in terms of business generation, business development. That's just the way that they think. So we have to understand that, and that's what we're working with. And so, yeah, I mean, if you are Australian regulated, you probably will get a question about it.
Yeah, I think regulators, when they're looking at marketing for firms, they shouldn't. They should be thinking about how do we make sure we protect the consumer, and that's their focus, right? Not how these firms advertise themselves.
How do you feel about it, Matthew? You're only onboarding professionals, I hear.
No. Very much retail focused. Professionals as well, but yeah, absolutely on the retail side. Look, I think, if you're going to regulate a firm, then it should be able to market, right? That's the whole point. And we're wrapping up maybe this moral stance with betting companies, and betting you can roll into the sins and vices of human life, and being a trader isn't a sin or a vice, right? It's a lifestyle choice. It's a way of making money, and people who enter that are expecting to succeed. So they see a football team succeeds, it has a brand on it that they think succeeds. It's perfectly logical. I think it's a bit unfair to lob it in with the betting lot. I don't say Alex was doing that, but I feel like it would be throwing the baby out with the bathwater.
Yeah. No, I think it makes sense, and it's a good way of actually presenting it, and I think it's wrong of the regulators to go to that level. You should be able to pretty much run your business with hopefully more clearer guidelines. So I think we will see a shift going back and forth on that. But anyway, since we're on that topic, Matthew, how do you feel about the offshores in terms of we've seen a lot happening there, and I think you have presence in those jurisdictions. Have you seen a major shift in the past years?
Yeah, so we have FSA, that's Seychelles, and FSC, Mauritian regulation. I guess the easiest way to demonstrate this is in 2010, the Seychelles had 2 securities dealers. In 2016, it had 13, and in 2022, it had 130. And I think in 2023, we're up to 160. So it's not slowing down. When the securities dealer license came in, or I think the Securities Act 2007 came in, then obviously the Seychelles wasn't expecting an influx of CFD and FX brokers. I doubt whether they even knew what our product was. It was supposed to be for on-exchange securities dealing. However, it's no coincidence that 2018 and the product intervention rules equaled brokers going outside of the European and British regulations to go. And mostly this is client driven. Okay, let's be perfectly honest here. Yes, the brokers like higher leverage, there's no lie about that, but that's because the clients also like higher leverage. They do want that particular
But do you feel
facet.
that drive was also encouraged more by Brexit?
Was it encouraged by Brexit? I don't think so. I think that Brexit itself didn't really affect it because the UK adopted the intervention anyway. So Europe and the UK both, even though you couldn't passport from the UK to Europe, everyone had a European entity that they could then operate through. So I don't think that was an accelerant at all. I think it was mostly driven by ESMA. But then once enough firms, start moving to offshore, there's a credibility attached with it. You already retain your European, UK, ASIC regulation, and you bring that business model and the people involved with it over to offshore. And it almost naturally increases the credibility of that jurisdiction. And I don't want to oversimplify it by just saying it's leverage, right? We're talking, tax. So if you look at Mauritius, for example, Mauritius has given an 80% discount to securities dealers from its 15% corporation tax. It's 3%. Right, so if you make your money in Mauritius, onboarding through as a liquidity provider or putting your flow through that entity, you're going to pay 3% on your profits, right? So they're actively going for this market, whereas it feels like Europe's actively pushing us away.
But can you see a trend in those offshores moving towards this St. Vincent situation?
Okay, so actually going back to what I was saying about how the kind of movement of regulated firms in the onshore jurisdiction moving offshore, it's actually created a situation where some of the people who would normally look at offshore light touch regulation, let's call it that for the time being, are actually being assessed more stringently, and they're not being approved. And where do they go after that? Well, they go for the completely unregulated model. So I think you've got these 2 offshore models. Have you got regulated onshore, which probably didn't have any credibility prior to the sort of upsurge, and you've got the completely unregulated sector. Now, both of them have their challenges. The unregulated sector, for me, the biggest challenge is banking, right? And most of the ways that they take money would probably fall foul of most regulators, AML, KYC, checking facilities. Whereas the regulated firms on the other offshores, for example, I can only really use our group as an example. We have the FCA and we have the FSA and the FSC, and we use the same onboarding procedures, checks, risk matrix across the group. And I'm sure that the majority of the competitors of ours that have that kind of marquee regulation will protect it by not allowing their offshores to do things that that would, I guess, undermine the credibility of the firm. So that's one point. Along with the tax and the leverage, it is important, I think, just to kind of go into a couple of other areas which do help. There's much lower capital requirement. If you want to put a lot of flow somewhere, putting it through the UK and Europe, especially after IFPR with its K-factor requirements, it's pretty hefty stuff. Suddenly you've got a jurisdiction that allows you to put $50,000 up and take whatever risk you want. It doesn't matter if it's correct or incorrect, really. It's for a firm to not have capital sitting there doing nothing is incredibly attractive. And then finally, you've got this, I guess, promotions and jurisdictional reach. So the promotional compliance in offshores is nowhere near the same level of scrutiny. It doesn't require you to cap bonuses. It doesn't require you to seek approval every time you want to do a campaign. Yet. But still, it's not even in the amendment to the Securities Act, so I don't see it forthcoming. At the same time, again, everything affects the brand. So if you've got a firm with a marquee regulator in the group, they're not going to do something that affects the brand. So I think it kind of self-polices. But yeah. Hope I answered that.
Alex, you probably have some good comments around this.
Yeah, so I think one of the things I've noticed in terms of offshore groups where there was a lot of restructuring post, say, product intervention rules and stuff like this, is a few years ago, I think the attitude from regulators was more of, okay, as long as you don't do wholesale transfers of clients from onshore entity to offshore entity, we will tolerate it, provided you put some garb on your website saying, look, guys, this is not targeted at UK clients, it's reverse solicitation, we're not marketing to you. What we've started to see a little bit more of, and the latest crypto promotion rules are a good example of this. If you look at the guidance that was published in the last 2 weeks or so around crypto financial promotions, is we're seeing now a more activist approach, i.e., are you using geo-blocking software to stop customers from accessing your website? Are you embedding in your onboarding processes filters which say, okay, this is a UK customer, it shouldn't be going to this entity, it should be going to the UK entity, because otherwise they're not going to be protected by the consumer duty and stuff like this. So I think that's a big shift.
How long do you think reverse solicitation would last for?
From which perspective? From UK?
From European perspective.
Well, to be honest with you, has it really lasted now? Because certainly when I was dealing with a lot of the post-Brexit stuff in my previous firm, I think a lot of the advice that we received and a lot of the interaction that we had with regulators in the EU was pretty much like, well, reverse solicitation is almost useless, and it's certainly not how I had read, talking about guidance and, if you look at all the ESMA guidance that had come out until that point, it looked totally fine to rely on reverse solicitation. And then certain jurisdictions, say Italy, Consop, jurisdictions like this, they started to, in my view, it almost felt like they were gold-plating their requirements because of some local concerns.
It's odd in Europe that ESMA dictates, well, doesn't dictate, but gave recommendation. And then you see very different approach being taken by each European member state. So I think that's interesting. And I think we may start seeing more of almost dissolving all that reverse solicitation exemption almost altogether. So...
Yeah, well, I mean, not from like a European regulatory perspective, right? Like each regulatory body in each country in Europe approaches regulation differently, even though it's under one overarching system. And the other thing that I've seen just through our own client base is European firms that are trying to do business in the UK are facing a reverse challenge, which is they want to get authorized to participate in the UK markets, but actually they don't have the license for it, which they did under European regulation pre-Brexit. And as a result, they're trying to find mechanisms for being able to do business here. And one is you apply for authorization, much of which is being rejected by the regulator here in the UK, or you could potentially buy an authorized body to actually do business in the UK, and even there's challenges. So it's kind of a bilateral challenge for firms right now trying to do business both in Europe and the UK. So UK businesses trying to do business in Europe, and European businesses trying to do business here in the UK.
Are we seeing Dubai as becoming the next hot hub?
Yeah, I mean, Dubai... I mean, if I was to, especially in our particular sector...
That's called the Emirates, rather.
sorry. The Emirates. We have London, we have Limassol, we now have Dubai. You've got a triangle of centres for this industry, as far as I'm concerned. The growth has been extremely fast. I wouldn't class it as an offshore, personally. I think, when I say that, I mean, whilst it's not a prime regulatory authority, the DFSA is well respected. It's pretty tough on its participants, and there's a lot of high quality people in that jurisdiction. I don't see it as an offshore. In fact, it's probably brain drained a little bit of people from the UK and Cyprus for that reason. So yeah, I very much, obviously I do because we've set up an office there. So I obviously think it is an important region. But it's that being a local broker is important, and you see now within the industry, everybody's trying to get as local as possible to their client base and also to the regulation, because the passportability of regulation has fallen off a cliff. Is exactly what Matt was saying there, and there is a huge kind of attempt to try and get some way back into the UK for the brokers, but it's not impossible. But I think there's only been one approval in the last 18 months or something incredible like that. And then you had the transitional period where you had 55 brokers apply, and there was only one accepted, and the rest had to leave. So this is it's a closed house.
And for us, we have a load of European brokers trying to figure out that path. And literally, as you said, like one approval, I didn't know it was that low of new applicants. Is that right?
Yeah, I mean, I don't definitely. I
won't quote you on that. I won't quote you on that. But like what I am seeing is like our clients are asking us for like guidance, like how do we get there? Where can we buy companies? And they're looking for domestic approved businesses, and the FCA is not blind to this, right? So they're looking at this and saying like, we're opening up a door that maybe we don't want to have open, and like, how do we close it?
I think actually with the UK, what we have seen during the at least you could say licensing, is they are also looking a little bit like you mentioned, Matthew. Are you actually doing business in the UK? Where's the majority of your business? And this is one of the questions we have about the offshores. Are you telling me your Mauritius setup is for Mauritius clients? Probably not.
Yeah, of course. I mean, there's a limited client base in the islands.
So I think the question really lies in the regulators are beginning to question where and how are these actually institutions operating from. We've been discussing this issue for more than a decade now, and we even sat with the FCA specifically on this issue. Because if you look at even a lot of businesses before Brexit, how many were operating in the UK and doing really the majority of their business out in the UK? We've also seen many regulators over the past years, in particular with Cyprus, when there has been few issues, in particular around CFDs and retail intervention rules around it, and so forth, where there has been a lot of questions from the other regulators in Europe is, guys, why are you operating out of Cyprus if 99% of your business is actually, for example, in the Netherlands or in Germany or in whichever European country? So I think the fear that I'm seeing is at one point, this is exactly what St. Vincent is actually doing. They're literally saying, well, why are you getting regulated there when the majority of your business, well, in fact, all your business is not there. So that's fine, we'll regulate you, but then go and tell us where you can actually run your business from by showing us an actual license or a permission from the jurisdiction where you're operating your business. So I do feel that something is going to happen. We've been good at predicting things, so I think it's a little bit, in transition mode, but I do fear that there are lots of changes along the way, and I can see you're getting a little bit excited there, Matthew.
I think we've brought St. Vincent into a party it wasn't invited to. St. Vincent's an unregulated environment. We're talking, especially from myself, in case of the Seychelles and Mauritius, I think there's some truth in what you're saying. I think the Seychelles, when it opened its door, it wasn't necessarily expecting 160 brokers to fall through it. And at the same time, it's certainly amending its Securities Act to bring the brokers to account, because it didn't know that it was creating an area which they were able to use to expand after it had been closed down elsewhere. That doesn't necessarily mean it's wrong, but they did need to get control of it. I mean, if you read their Securities Act amendment, it's based around the fact that they can't deal with 7 complaints a week. It's to do with the fact that they get complaints from 4 overseas regulators saying that firms in Seychelles are operating in their country without regulation. And it's completely right that people need legal opinion and need to justify how they're operating in that region. It's not for the Seychelles regulator to do that. They want local people, compliance on the ground. They want a local director on the ground. These are all completely reasonable requests, but it's not anybody's fault that they didn't have this when they applied for the license because it wasn't required.
Then let me ask you one last question, not stop on this topic.
And I'd like to opine as well.
And you can comment on that as well, Matt. Let's just assume for the sake of it, that one in those jurisdiction defaults. How do you see on retail clients having any form of compensation from a local fund?
Just to clarify, when you say default, do you mean a broker going bust?
Goes down, pretty much bust.
Well, I mean brokers went bust in the UK.
But there's also a very sophisticated compensation scheme.
There was the FSCS, so yeah, of course there's the £50,000 compensation scheme, but a government-backed compensation scheme from a country with deep pockets shouldn't really be a replacement for good risk management, for running your business properly and not allowing certain moments to bankrupt businesses. So first of all, I'd say that there shouldn't be an assumption, I'm not saying you're making one, that offshore brokers are more susceptible to bankruptcy than onshore brokers.
I'm not, I'm just wondering.
And obviously a smaller broker is going to have to struggle to build up a sufficient pot of money to be able to pay people out in compensation. I think the brokers address that with insurance policies for deposits, external insurance deposits. You got guys touting their wares here and from the insurance sector. But look, it is a risk. It is a risk. I think it's a greater risk when you're looking at groups where there's only one entity in an offshore jurisdiction. Clients need to use their own acumen and discretion to do due diligence. The firms, yeah, I think I've answered that. I'll let Matt have it.
Okay, so like my view on this, right? Like we live in a global market. There are global markets that are broken apart and fragmented. Crypto is a great example of an industry where there is a need for regulation. Nobody knows how to regulate it. FCA doesn't, ESMA doesn't, SEC doesn't. Nobody knows how to regulate it because it's global. And the reality is there's not going to be a perfect answer to this. I was encouraged when I saw recently in the last week or two the FCA's first step to trying to add some regulation to the crypto markets, which was regulate the venues. And the venues are the place where transactions happen. And if you start there, okay, brokers are doing business on these venues as are individuals. You can start to get to a place where at least you're starting to seed regulatory scrutiny and oversight. And the reality is, like in the case of St. Vincent, like if things go wrong there, they're not going to be able to pay people out, and we should all get that. But I think by starting to put in regulation around venues, you'll start to get to a place where at least you're starting to put in that control. I think obviously the brokers need oversight and controls, and like continuing to figure out like how do we put that in place without inhibiting people being able to do business through platforms is key.
Good. I think before we run out of time, everyone here is excited to hear about AI. I mean, the word now is used, everyone's doing AI apparently, everything is AI. Everything that's taking place these days is AI. The word of automation and AI have almost the same meaning these days. So I'm actually excited, Matt, to hear your view about it, seen from your side. And it'll be nice, actually be super nice if you can define it to the audience.
Like I'm watching the time run out on the clock here, and I was hoping we were going to get through this whole thing without me having to talk about AI. Because I actually find this topic a lot more fascinating and a lot more important. But AI is important, and the use of generative AI is important. From my perspective right now, like we need to be looking at ways that we can regulate markets. We can use technology to achieve that, and AI is going to be a key part of that. It was probably January this year, I was first asked by a journalist what my strategy was for ChatGPT. ChatGPT at that point, by the way, from an OpenAI perspective, where everybody suddenly realized about it, was less than 2 months old. In fact, I think it's this week. It was a year launch since OpenAI released ChatGPT. And I was walking, I'm not kidding you, this actually happened. I was walking to school with my daughter this morning, and she looked at me, she's like, Daddy, my friends and I cheated on our test yesterday. I'm like, what did you do? And she's like, well, we asked ChatGPT. I'm not kidding. And they actually did. And they had to write this script for some drama thing, and it wrote it. And she's like, but it came back and it wasn't very good, so we asked it again. And the second time it came back with like this great story. and it was
pretty much ChatGPT these days.
For sure. And so I'm good friends with a few people. I won't name their names. One of them, they're CEOs of big broker firms.
Called Matt?
No, actually. They're the CEOs of global big broker firms, and we were over at a restaurant in the city a week or two ago, and one of them was the ex-chairman of the Toronto Stock Exchange, and he's also a professor at the Toronto University, and he's like, I've just invested in this company in Israel that looks for the utilization of generative language models in responses, and it can actually detect it almost 100%. So I told my students, when you submit your dissertation that's coming up, if it comes back and my system finds that you've used ChatGPT to answer it, you get a 0. And I looked at him and I'm like, why? And he's like, well, they cheated. I'm like, well, did they? Like, they were asked a question and they have to find an answer. And humans, like what we do is we look for ways to find the best and most, we use tools. It's a tool, it's a utility. And they're using a tool to find an answer. Why would you get mad? And in fact, like in the old days, I remember when I was young, using a calculator in an exam was taboo. You could not do it. Well, actually, why would you remove that tool from that human to get the answer as fast as possible? And and I said to him, I'm like, you shouldn't actually do that. What you should say to them is, I'm going to analyze your answers, and if I find out you used ChatGPT, okay. If you gave me a shit answer because you've asked the wrong question in the wrong way, then I'm going to give you a 0. And these days, like the reality is, there's no more development when you use these things. It's called prompt engineering. So it's asking questions. And what we found when we started to investigate and actually deploy this, because we have it within our systems today, was the trick is to be able to ask the question to a generative model to get the right answer. And it takes a lot of time and a lot of thinking and a lot of back and forth till you get to that point. And I encourage people to embrace it, but use it in a way that's actually intelligent and meaningful. We're humans. The reason we're where we are as a species is our ability to use tools to make things happen, whether it's the wheel or fire or...
So what's your advice to the audience, Matt?
My advice is to educate yourself, to learn, and to figure out how to use it in a way that's going to save the world. I was also asked recently on a panel, can you give me an example of when AI went wrong? And people were coming back, oh, I remember when there was this algorithmic trading tool that we built, went off and it went and did these things and it terrible results. I can give you the best example of where AI went wrong. It was when Arnold Schwarzenegger came back in time. Some of you will get that. If you don't, you haven't seen The Terminator.
Alex, last word. You've got a minute each.
Well, I think on the AI piece, in terms of the regulation, there was a discussion paper published quite recently by FCA and Bank of England. So far, they're not setting out their stall. They've just taken the opinions of quite a number of firms, and I think I think the way it's going to go, at least initially, is there will be a loose framework of accountability principles, possibly similar to that published by the Dutch National Bank. But again, the focus will be on the consumer investments, particularly around possible gaming of financial crime controls with deep fakes and things like this, something which was mentioned in the paper, and also the potential to exploit biases and how that could damage consumer investments. So, yeah, I mean.
last words from you?
Yeah, I mean, contrary to what Matt said, I could listen to the AI piece all night. It was, for us, from a practical use, AI is interesting. It's slightly terrifying if our clients start using anything in the way of predictive or automated trading. Generally speaking, if there's an error, then who's to blame? And that's a big barrier for brokers offering it, because it feels like you're endorsing the use of it, and that could lead to problems. But undoubtedly, it's the way the world's going, and we need to make sure that we're embracing it and we're part of it. At the moment, it's a good regulatory tool, a good sort of regulatory oversight model, piece of software, looking at our stuff using AI. That's a great use. But it's still to come. I think for us, it's still to be decided.
Perfect. Thank you, Matthew. And just one last thing from you, Alex. What's the most important regulation for everyone to pay attention to in 24? And you have 11 seconds.
I think EMEA refit, and I would say in particular, if you've got any outstanding back reporting from previous issues, make sure you do that before the new regime goes live, because then you're going to be on the new reporting template, and back reporting anything that you find which has occurred before then is going to be an absolute nightmare. So don't make that mistake.
Perfect. Thank you very much. We're sorry we ran out of time. Apparently the award ceremony is about to take place, which is very important. So thank you very much to all of you.